Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today's our 81st episode, Understanding Investments. Corey, I think this is a trifecta. I let you be on the show 3 times in a row now. I guess I shouldn't say let. You've joined me on the show.
Thanks for letting me.
You've joined me on the show.
3rd time's a charm.
3 times. Well, welcome back. You're becoming a staple on our show, and you're doing a great job.
Thank you. You too.
Well, thank you. So for today's episode, we wanted to talk about understanding investments. And I wanted to make this very basic and simple to begin with, and then turn it up a little bit more advanced as we progress.
Okay.
So let's just throw out some of reasons of, well, first, why do people need investments? Why do you even need investments?
I would say to provide yourself for a certain lifestyle in the future.
Okay. Yeah, probably a little bit more technical term would be that so that your capital can grow faster than you can spend it.
Yeah.
Right? Because theoretically,
You said
what was your
basic?
That is basic. That is basic. Your money can grow faster than you can spend it.
Yes.
What did you say your answer was?
I said so you can provide yourself for a certain lifestyle in the future.
Yeah, but I think you could do that with cash, right? Is cash an investment? I guess it technically is.
Technically speaking, it's a security, right? But yes.
I don't know if it's a security. Security, it needs to be like listed.
Yeah, good point.
Anyway, so we're getting very basic here. That's why it's tough for us to comprehend this, because we're normally pretty technical into things. So let's list out some types of investments. You've got cash as an investment. I don't think it's a security. You've got gold. You've got property, land. You've got stocks. You've got bonds. What else is there? What other type of investments? Bitcoin.
Cryptocurrencies. Right?
Cryptocurrencies.
Energy investments.
Energy, like oil and gas.
Mm-hmm.
Yeah. Mineral rights.
Yep.
Businesses.
Yes.
Right, that'd be an investment. You can invest in businesses, privately or publicly held. That's a lot, right?
It is.
Commodities, the farmers, like gold, or like not gold, cotton, corn,
Sure.
livestock.
Or, art.
Art is a good one. That's another. Jewelry,
Yep.
collectibles, right? So baseball
Exactly.
cards, stamps, coins.
Vehicles.
Yep,
collectible
classic
vehicles.
cars definitely could be an investment. So there's a lot of them out there. So by listing all these off, maybe our definitions aren't right? Would you have a car so that you could sustain some sort of lifestyle or grow your capital? My definition might not be right either.
Maybe. It's almost, well, when we're talking through it, it almost makes me think, why does someone invest? You're purchasing something today
Or trading.
or trading
You could barter investments.
with the hope that that particular object, whatever it is worth more money in the future.
Yeah, and I could say that maybe it's something also that you see value in.
Sure.
I think value is a big word that would go into that definition of investments. All right, so now that we're off to this like basic philosophical thinking, what we deal in at Falcon Wealth Advisors, which is a little easier for us to talk about because we talk about it all day long, we help our clients with investments, to your definition, so that they can sustain or increase their lifestyle. Right? That's what people come to us for. They say, hey, I want to invest in something that's going to grow my wealth, increase my wealth, protect my wealth, so that I can go out there and I can spend money on goods and services of other things that I value. And that's really what we do at Falcon Wealth Advisors is we help manage the investments so they can do those things. Now to go a little bit deeper into the type of investments that we do, so when you're getting into finance and you're working with a financial advisor, you have to be very careful because there's a lot of advisors out there that deal in all different types of investments. In fact, you and I are licensed to deal in stocks, bonds, mutual funds, exchange traded funds, annuities, insurance, other insurance products like long-term care or life insurance, bonds. All different types. Private equity, gold. There's all different types of investment vehicles out there. And so you have to be very careful. Don't think that all financial advisors manage investments the same way. So when we're explaining understanding investments to our clients, one of our mission statements or our themes of our practice is that we want to simplify things. We want transparency. And so we redefine wealth management. We bring it back to the way that we think it probably always should have stayed, which is literally buying stocks and bonds for our clients. It's that simple. There's no third party. There's no mutual fund, money manager, prospectus, private equity. We're not buying cattle. We're not buying corn. We're literally buying stocks that are publicly traded out there on the New York Stock Exchange or the NASDAQ, a public exchange. And we're buying bonds that are traded in a very similar manner, right? They're out there and they're publicly owned bonds. And it's that simple. And we blend those assets or those investments together based on historical returns, which again, history is no indicator of the future, right? You can't predict the future with history, but we blend it based on what reasonable assumptions there are moving forward based on what's happened. And again, we can't count on that to help hit our clients' target rate of returns.
And their target rate of return is designed to do what?
Designed to grow that capital so that they can sustain or increase their lifestyle without running out of money. And that's the key piece is we don't want our clients to run out of money unless they want to, right? It's their money. If they want to run out of it, they certainly can. They reserve that right. But that's the idea. That's the idea behind understanding investments. I think a big misconception out there, though, is that people think that all advisors would do things that way. To me, it's pretty common sense. If you go into an advisor, Corey, if you're my advisor, I trust you to manage my money. You're going to pick the stocks and bonds, and I'm going to rely on your advice. Unfortunately, most advisors don't do it that way. Most advisors they're just pushing product, right? So they're using XYZ mutual fund or exchange traded fund or annuities, and they're not qualified, nor are they taking the time to actually invest the capital for their clients. And why do you think they do this?
Probably for a number of reasons. One, because it's less work. Two, because, and I don't mean that in a bad way. I mean simply, if I had my own firm and I was Corey Bittner Financial Services, and
Don't ever do that.
Me and one other person, right? If it's me and one other person, though, it could be a capacity issue, right?
Yeah, good point.
Where it's like I don't have time.
Yeah, so they've got 100 clients, 200 clients, and it's just them and an assistant in an office. There's no way they'd be able to manage that by themselves.
Right.
I mean, I guess they could. They probably just wouldn't be able to do a good job.
Exactly. And I think that's probably a big reason why. And then secondly, I think things don't change until they need to, generally speaking. And I think when we're talking about using products, if it's mutual funds or annuities or exchange traded funds or whatever it might be, if that is what wealth advisors or financial advisors or brokers, right, in the past, if that's what they've always done, that's what people continue to do.
Right. So again, ignorance is not an excuse. If you're watching this and you're not a client of Falcon Wealth Advisors, we highly encourage you to go out there and ask your advisor, hey, what kind of investments am I in? Right? That's an easy question. What kind of investments am I in? And then a great follow-up question is, are there any hidden fees, or how is it being managed? Do you control it or does somebody else? And maybe they say, you know what, I'm not qualified to do that. So yes, we use XYZ mutual fund. I know the portfolio manager very well, and I trust them with your assets, and so that's why we're doing it that way. And that's fine as long as they disclose that, right?
Yes.
And then maybe they disclose the fee, because you don't think that they're going to use an outside third party, and that third party is not going to charge you, the end client, more fees.
Right.
Right. So that's the deal. So again, we have an internal analyst. We're linked up to a great group with Hightower that provides us, with more information. We've got Bloomberg in here, and so we're looking at that stuff constantly. We've got a team helping us, and we just feel part of our value proposition is managing that stuff directly for our clients.
Right.
We don't use a third party because we don't know what they're doing. You lose transparency and you increase fees.
And quite frankly, in my opinion, and we've talked about this before, maybe even on the video, where at the end of the day, we know why the clients are hiring us, right? Because they want help, but there's also performance is an expectation, right? Those are table stakes, and we get that. And the idea is, I think generally speaking, individual investors are going to hold their advisor accountable for their performance,
right,
regardless of whether or not the advisor is actually managing the money.
That's a really
so
good
our
point
point of view is we would rather have control, and if we're going
Yes.
to be held accountable, we can, if it means we have to fall on the sword, so be it. If we make a bad choice or we make a good choice, we know that it's something that we were doing, not something that was completely out of our control that we're being held accountable for.
Right, we own it.
Yes.
You're absolutely right. Because again, the client, you should hold your advisor accountable for the performance. And again, a lot of these mutual funds are great mutual funds, but you don't need to be paying your advisor a fee to go buy you a mutual fund. I just think that's ridiculous. And probably worse than that are the exchange traded funds. You know, these custodians like Charles Schwab and Fidelity, I think it's free. Is it free for retail investors too to buy an exchange traded fund?
Yep.
Right, so you literally could go out there and just buy what the S&P 500 does. The exchange traded fund may charge you
A nominal
yeah,
fee.
like 0.1%. But the issue I have are that advisors will tack on their 1% fee on top of that, literally to do nothing, to maybe put a trade on that takes 30 seconds. And that's it. And the computers do the rest. And it's like, the problem is these retail investors are the ones getting, you know, horrible performance. And I see it too often. I have prospective clients coming in here and their advisor performance is lousy. And it's because the advisor's just putting them in products that are designed to mirror the index, but you're not going to get the index returns if they're charging fees on top of it.
Right. You're going to get the return minus the fee.
Yeah, so it's very important that you understand investments just like any other consumer, right? When I go to a grocery store, I'm looking at labels,
Right.
right? I want to know what's in this product that I'm going to put in my body,
Right.
right? I look at labels, right?
Sure.
Or when you buy a car, you're going to take it for a test drive, or you're going to look under the hood, or if it's a used car, you're going to probably look at the car. Is a Carfax report, right?
one of them.
Yeah, so you're going to go look at the history, just like anything else. You got to understand that first you want to work with a fiduciary-minded advisor. In our opinion, that's only someone that has an independent mindset that's not working for one of these big banks as an employee. And then two, understand your investments and say, hey, what are my hidden fees? Why don't you pick the stocks and bonds for me? And how does it stack up to everything else? So it's good. It's very important to understand your investments.
Yes.
Good. Did we pound the table enough on that?
I think so.
All right, now I've got a fun new segment for today's show, and I'm going to call it the Bird of Prey poll. So there's not a lightning round.
I thought there might be something more to it. That's
Hopefully
good.
the bird screeched across the screen because I wanted to bring that back. So the Bird of Prey poll here is we've been pushing out these polls because we love hearing from our clients and our followers on Facebook. And if you're not out there, this is a quick commercial for that. We're on all the social media platforms, or not all of them. We're not on TikTok, not yet.
Not yet.
But we're on Instagram, Facebook, Twitter, LinkedIn. If you're watching this on YouTube, thank you so much. If you're listening to this on your favorite podcast platform, we really appreciate it. Our subscribers continue to grow, and it's been a lot of fun producing this content. So enough for the commercial. Out there on Facebook, we've been pushing out these polls, and we love to hear what people are thinking. So I got results from 2 polls today, Corey.
Let's do it.
So question number 1 here that I'll go over is, which do you prefer, stocks or bonds? Did you answer it?
Both.
Both. That wasn't an option.
Yeah. Okay.
Stocks or bonds?
Stocks.
Stocks. So 76% of our survey participants chose stocks. Why do you think that is? You know our Facebook followers. Why do you think they chose stocks?
I think people assimilate, or when they hear stocks, or they think about stocks, or think about investments, they think about better returns.
I think stocks are sexy. There's not that many movies about bonds.
Sure.
No, there are though, but there's not that many. Bonds are boring. I don't know. I don't know why. Maybe people don't understand bonds. The correct answer, by the way, is both. We had several people. Did you see that in the comments? They put both. Maybe that's why you said it. That's a good answer, though. It is both. Both, in our opinion, for most. Again, this isn't everybody, but for a properly diversified portfolio, it probably makes sense to have both in there. There's no right answer here. It's more of what do you favor. And I would argue that stocks are probably sexier. People understand those maybe a little bit better.
I bet if you asked that question when the market's way down, your results would be different.
That's a good idea. Maybe we'll do that when we have a pullback. All right, so question number 2 in the Falcon Wealth Advisors Bird of Prey poll. If you like that. Poll question number 2. If your company offers a pension and gave you the option of a lump sum or an annuity, which would you choose?
It depends. I know that's not what you're looking for.
So what's your answer on this one, Corey? Lump sum or annuity? You get a pension.
All things remaining equal, a lump sum.
Yeah, 73% on this poll chose lump sum. Now, you're right, though. Your answer is right. It depends. Sometimes those annuity, and again, we're not talking about annuities as investments. We're talking about a pension that's going to pay you a monthly check for the rest of your life. Sometimes they're not that bad. So the idea is that you want to crunch the numbers and figure out what does that monthly paycheck look like versus the lump sum. And if you took the lump sum, what type of rate of return does your advisor need to make you in order to equate to that annuity or monthly payment? So it's some easy math that we do at Falcon Wealth Advisors. We can help you make a decision on that. So if you have been offered a lump sum, certainly give us a call because we can help crunch the numbers and let you know whether an annuity or a lump sum payment from your employer makes most mathematical sense for you.
Yeah, we see sometimes employers do provide the option, just like you said. Sometimes they don't. So a lump sum isn't always an option for a pension.
Right.
But there's also instances where, I think it was our last episode where we talked about if a company offers a buyout. We've certainly seen instances where somebody might have benefits they accrued at a previous employer, and now that previous employer is coming out and saying, you know what, we're open to buying out your benefit, right? We'll give you a lump sum of money.
Yeah, that's a good point.
Instead of a pension when you're retired.
The key is there's no right or wrong answer. You just want to crunch the numbers. You want to work with, again, a fiduciary-minded advisor. It's under an independent model, right? So they're not an employee of some bank. So they can give you good advice.
Why do you think lump sum was the popular answer there?
I don't know. I think people like having money today. I think it's the marshmallow test that I talked about. I think people don't want to delay their gratification. And now, again, I probably would choose a lump sum too because I'm a stock and bond guy. I'd rather have control of my money and invest it. So yeah, I think most people. Also, when you retire from a company and if you're getting a pension from them, we all know that companies can change. And that's posing a little bit of a risk there that if your company goes out of business and they're paying you a pension, well, now what? Right? So there's a little bit of risk there with the pension. Theoretically, if you have enough money, you could just take the lump sum and just set it all in cash.
Right.
Right? And then you're not tied to anything but America, I guess, because you want to make sure your cash is still worth something. But
I think
control. Yeah. I think control and detaching from their company.
And I think probably purchasing power, right?
Sure, yeah, because a lot of times those pensions, when they're paid out in monthly checks, they don't grow for inflation. That's important. Sometimes they're just a fixed payment, and if you retire at 60 and you know, hopefully you live a long life, that $2,000, $3,000, $4,000 a month is not going to be, or we're not going to buy what it buys today. 20 years from now. Good point. I don't know. So yeah, so if you're not out there following us on Facebook, we encourage you to do so. It's under Falcon Wealth Advisors. Just hit a quick follow button, and you too can participate in our Falcon Wealth Advisors Bird of Prey polls. All right, is that all the time we have for today, Corey? Is there anything else you wanted to add?
I don't think so.
Thank you as always for tuning in. We hope you all have a great week, and please be on the lookout for more episodes.